There is a credit card explosion going on. There is a boom in the amount of credit card debt Americans are racking up. I'm concerned. What's the data say? Why? And then how can we get out of this? I've got that and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. Credit card debt, guys, this is bad news. This is bad news. Credit card debt is exploding this year. Balances are exceeding limits and previous records. We've got more credit cards being opened. Check out some of this data. Credit card balances have increased $46 billion just in the last quarter. Overall household debt has surpassed $16 trillion, first time ever that happened. And credit card balances have jumped over $100 billion, 13% over just over the past year. Also, biggest increase in nearly 20 years. This one is alarming. 233 million credit cards have been opened since April. That's the largest increase since 2008. Total credit card debt set to surpass $1 trillion. I'm not as surprised with that. You know, money's getting, there's more money out there, so we will hit all-time highs. But it's notable. It's the highest level ever, about to surpass $1 trillion. So the big question is why, and then what should your response be? The whys, I think, are fairly clear, and the scapegoat here, and it's part of the answer, is inflation. It's getting more expensive for you to live, for me to live. General costs are going up, and inflation is a rate of change number. So to me, and I think to you as well, we think, well, we're seeing inflation. When inflation goes away, prices will come back down. That's not how that works. That is not how that works. Okay, your chicken nuggets cost more today. Inflation will go away when those chicken nuggets stop growing, stop increasing their cost at the same rate. Not that they come back down. So the price of gasoline has gone from, let's just say, $2 to $4, and it went up, five and a half, almost six in some areas. So inflation doesn't go away when the price of gasoline comes back down to $2. That's not how that works. In order for inflation to stay as high as it is, it needs to go from 2 to 4 and then from 4 to 9, right? And that seems unlikely. So inflation, it should naturally stabilize over a long period of time. It's already lasted and it's gotten way more severe than what anyone would have wanted. Hopefully that stabilizes, but that's the first reason why. Living is getting more expensive, and therefore more of your life is needing to go on short-term loans, credit cards, as opposed to just can be covered out of your normal income. But that's not it alone, inflation. Most people have added new and higher fixed monthly obligations into their financial life, and therefore when you've got less money available to then be spread out for the rest of your lifestyle, that's where you're getting pinched. Because now you've got fixed obligations that take up more of your income than what you originally had, and that leaves fewer dollars to then go after other expenses, other lifestyle items that now cost more to begin with, and that's why we're touching more credit cards. Things like mortgage payment, things like a car payment, things like rent, those are now higher, and those are fixed obligations, and therefore people are turning to credit cards to cover the other variable but still regular monthly expenses. And I think the consequences of this are significant, okay? Yes, possibility that the consumer generally is weaker, and therefore if and when we see a really severe economic downturn, this could be more damaging. But to me, it's more personal. You've got more future income that's got to go to previous expenses, previous consumption. That slows our economic growth in the future, okay? And more personally to you, you've got money that you've got to earn in the future to go to pay previous bills, previous expenses, instead of going towards goals. When these credit card debts kind of balloon and get bigger, you've got to decide, well, what shoe drops? How do I make adjustments so that I can continue to pay this? And oftentimes it leads people to sacrificing on saving up and achieving long-term goals so that they can pay for the credit card debt. You go from, you avoid the important but not urgent saving so that you can deal with the important and urgent financial issue, and that is paying the credit card bill or paying that month's payment. So we can't even fathom the magnitude right now of what all this credit card debt is going to do to preventing people from achieving their long-term financial goals. To me, that's the big consequence. So what do? Well, if you find yourself with all of a sudden more credit card debt than you've had in the past, maybe more than you can manage, maybe you've opened credit card debt recently, this video is not to shame you. It's really to help you guide through it. This is not, lots of people are going through this, and it's for factors oftentimes outside of your control. So what do? You get it back in control. You implement, number one, you implement a 3 bank account system. This is the credit card prevention process. That's what this is. That 3 bank account system is you set up a bank account. You already have it set up. It's your checking account, but you build a budget that shows here's how much income is coming in from my various sources. Here are all the monthly expenses that come up. Okay, so here's what happens every single month. Here's the income and here are the expenses that happen every single month. And you've got to adjust and make changes to that until all the numbers fit. But then second, that second account, you set up a savings account, sometimes multiple savings account, because you're taking a look at out there in the future, what are the non-monthly expenses that are still going to come up? The expenses that you're going to say yes to because they're needs or they're really high priority wants. You're going to say yes to them. You're going to spend the money anyway, but it's not going to come up every single month. These are typically the reasons why people get into credit card debt, by the way. You're going to list out all of those known non-monthly expenses, total it all up, divide it by 12, and save every single month. It's got to fit in that budget from number one. You've got to save and set that money aside so that when those expenses come up, whether it's next month, next quarter, next year, you've got the money to come up to cover those. So those are things like vacations, car repair, car replacement, home improvement, deductibles for insurance, insurance premiums, those things that happen every year or every couple of years, but they don't happen every month. If you're not planning ahead where you've actually looked at what those costs, divided it by 12, and automatically set that money aside out of your budget, you're not going to be prepared when those things come up. And then those are now they move from an important but not urgent thing to an important and urgent financial issue. And now you typically are reaching for that credit card or you're unable to pay that credit card bill off. Now you've got credit card debt because you weren't able to manage it all. So that's bank account number one and bank account number two. And then that third bank account is then squirreling away some dollars, building up some cash reserve, some emergency fund, so that when you get blindsided by an expense, you've got some resources there that you can tap into instead of touching that credit card. If you follow that system, and it's a habit and a skill, you get better at it the more that you do. If that's the process, that 3 bank account system, if that's how you're operating your finances, you'll never need credit cards. You won't, because those tires that all of a sudden you need to be replaced on your vehicle, that's not an emergency. You've planned ahead. You know, yeah, I got to replace tires every 4 years. It's frustrating and it feels like it always comes out of the blue, but I have planned ahead that there's X amount of car repairs that I've got in my budget every so often. So yes, I don't want to spend that money, but I needed new tires and I've got the money right here. Here's $800 and to cover it or whatever, right? And if there's a car repair that happens that's far beyond what you had expected and prepared for, instead of reaching for a credit card, you've got that emergency fund in place. So that's the first thing that I would tell you to do. If you're dealing with this or you want to make sure that you're not bit and caught up like so many others are right now with credit cards, that credit card prevention process is the 3 bank account system. Now, what if you do have credit card debt? And what if your credit card debt has gotten a little out of hand? Then, along with that 3 bank account system, you've got to build in a debt snowball. You've got to start with that 3 bank account system so you can stop the bleeding. You can balance everything out and make sure that you don't need to incur additional credit card debt in the future. Sometimes these are very tough discussions. You've got to make some cuts or you've got to find a way to add more income, but get everything to balance. But then second, you combine with that, making a list of all of the debt you got out there, the minimum payments and the interest rates, and you figure out, okay, in total, how much needs to go to credit card debt, and you start finding a way to pay even more. And using that system, you can figure out where you put extra payments so you can get one debt paid off, and then you take all that payment that was going towards that credit card, you apply it to the next one, get that paid off quickly, and then you apply it to the next one and the next one, and all of a sudden that payment, how much you're paying on a credit card, starts to snowball, and you make a lot of progress very, very quickly, and it all fits within that 3 bank account system. And then the last thing I tell you to do, if this has hit you personally, is don't press that easy button too quickly to say, well, I'm going to stop saving to the 401k. I'm going to stop saving up for these long-term goals because I've got to attend to today. Work with your certified financial planner. That may make sense for a season, okay? But don't just automatically push that button to relieve the pressure. That may be something you need to consider, but work with your certified financial planner. I would hope you can put that 3 bank account system in place and you can do that debt snowball without having to sacrifice your long-term financial goals. Done it with lots and lots of folks. It's possible. It's hard. Takes a lot of planning, but you can do it. Work with your CFP on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or send us an email, info@korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.